The Sensex is seeing unusual expiry day swings, acting more like the volatile Nifty. Active traders are facing a market where options premiums refuse to decay, making short-term positions highly unpredictable. Against this volatility, the Reserve Bank of India is offering an unexpectedly lenient outlook on prices. This shifting stance is visible on the street. Institutions like HDFC Bank and Nomura are toning down their rate hike bets, predicting an upcoming pause. A pause in rate hikes translates to relief for consumers applying for mortgages or auto loans, keeping their monthly borrowing costs stable. This chart shows the stark difference in market reality. On the left, retail loan rates remain flat and manageable. On the right, the erratic line tracks the unpredictable options premiums, currently punishing active traders. Borrowers secured cheaper money, while active market traders absorbed the short-term risk. Tangible commercial real estate is becoming the next major destination for public capital. A new wave of specialized real estate IPOs is bringing that capital directly into the public markets. We can see co-working spaces and REITs driving this listings trend, with companies like Office Space Solutions showing substantial year-over-year revenue growth. Instead of a single wealthy entity buying an entire skyscraper, the asset is split into shares and distributed across thousands of individual retail investors. Public listings turn previously illiquid properties into accessible hedges against broader economic instability. Beyond physical assets, capital is targeting digital infrastructure. Industry leaders are pivoting. The current race focuses on the economics of AI, driving down compute and storage costs to reach a mass market price point. This chart shows the steep targeted drop in AI processing costs. The goal is to push compute and storage expenses low enough for home and small business adoption. When the cost barrier breaks, millions of smaller enterprises instantly gain access to the market. With a high density of small to medium enterprises and widespread digital adoption, India is positioned to become the top market for this affordable tier of technology. The immediate future of artificial intelligence depends on equipping small businesses with enterprise-grade tools, rather than selling isolated supercomputers to massive corporations. While consumer AI scales outward, massive corporations are scaling their back-end digital infrastructure. Infosys recently signed a 10-year deal with Crocs, valued between $200 and $300 million. A decade-long pact involves migrating operations to cloud systems, managing data analytics, and securing long-term, predictable revenue for the IT provider. All of that complex digital architecture ultimately exists to manufacture, track, and sell these foam clogs. Retail brands must now commit hundreds of millions of dollars to data networks and software services to maintain global supply chains and competitive inventory margins. Discretionary capital is also flowing directly away from traditional consumer goods and into personal health, wellness, and lifestyle. Hotel chains are allocating fresh capital specifically to capture the rising demand in wellness tourism. These travelers prioritize holistic care, mental health retreats, and physical recovery over traditional leisure or nightlife. This chart shows why hotels are investing here. Wellness tourists book longer durations and spend more total capital per trip than standard luxury guests. Wellness has established itself as a distinct, high-value segment within luxury hospitality, attracting a demographic characterized by higher spend and extended stays. From a dovish central bank and specialized realty IPOs to affordable AI, corporate IT deals, and wellness tourism, capital finds new avenues. Thank you for watching this sector-by-sector market digest. Please like, share, comment, and subscribe for your daily breakdown of business and global news.